So, what is Musyarakah mutanaqisah? Musyarakah mutanaqisah, it is a contract of partnership between two parties where one partner gradually buys the whole parts of the property. The transaction starts with the formation of partnership, after which buying and selling of the equity take place between the two partners. It is necessary that this buying and selling should not be stipulated in the partnership contract. So, for the first question, I'll be talking about the salient features of the contract that make it attractive as an underlying contract of a banking product. So, for the first features, the client and the bank must be partners and both must jointly acquire the property. The capital provided by both parties are to be determined before the contract are signed. The second one, the client and the bank will be the owner of the property based on the ratio of payment in purchasing the property. At the early stage of the contract, banks will still have proposition of property as the transfer is not completed yet. Third, the bank leases its share to the client and takes rentals for a predetermined rate. The financier or the bank is not tied to a fixed selling rate throughout the financing tenure. This is due to the revision of rental rate periodically to reflect the current market price conditions. Usually, selling price under Musyarakah mutanaqisah always reflects the market price and the rental is determined by the market rental values. Musyarakah mutanaqisah has also a flexible structure as it not only allows customer to pay rental according to market price, but the period for transfer of asset ownership can also be shortened, which would be beneficial for both the financier and the customer. It can also be tied to some economic variables such as rental index. Lastly, the periodic rental amount of the bank will be jointly shared between the bank and the client, accordingly to the percentage of the shares at the time which keep changing as the client is purchasing the shares from time to time. Upon finishing paying the full amount to the bank share will come to the end and the property becomes 100% ownership of the client.
Next is Sharia contract and product structure. Affin Islamic Bank is one of Islamic bank that adopt Musyarakah mutanaqisah contract, which known as Musyarakah mutanaqisah term financing I. Under this concept of diminishing partnership, the bank and the customer will jointly purchase an asset or property whereby the customer shall contribute the initial payment and the balance will be paid by the bank. Upon for customer to fully acquire the ownership of property, bank releases its share to the customer on ijara basis. In Affin Islamic Bank, the tenure limit is up to 20 years and the financing amount is in between 100,000 to 150,000 ringgit. The customer shall pay installment payment to the bank, which consists of acquisition payment and rental payment. As a result of the installment payment, the customer's ownership share in the property will increase and the bank's ownership share will decrease proportionately. Upon the customer had fully owned the property, the rental payment will terminate immediately. However, if the property cannot be occupied due to construction is abandoned, which cannot be revived, the advance rental will be refunded to the customer. Next, other than Musyarakah concept, Musyarakah mutanaqisah term financing file also adopts Ijara and Mu'ad concept. Upon for customer to fully acquire the ownership of property, bank release its share to the customer on Ijara basis. The bank release its share to the customer on the basis of Ijara Mawsufa fi Zimma, which is forward leasing during the property construction, or Ijara upon the completion of property. Customer will fully pay the monthly installment to become the ownership of the property. Meanwhile, Mu'ad is known as promise. In acquisition of asset or property, the price determination must be based on market value or in price agreement between both parties. Bank will request the customer to give a binding promise to gradually purchase the bank shares in an agreement period. In the result of the shares acquired shall not be on capital guarantee. And if the customer breaches his promise, bank may invoke the promise and sell the share to a third party. However, there are certain methods that Musyarakah mutanaqisah can be cancelled, which they must be by mutual agreement or loss of legal capability and the invalidity due to the termination of Musyarakah contract.
Moving to question Moving to question number 3, important provision of the contract. Highlight the important provision of the contract which must be embedded in the documentation of banking. There is several There is several important provision of the contract such as no fixed profit rate, no interest charge and advance profit, both party consent and termination lease in ijara. So for the first one, no fixed profit rate. Banks are not required to fix the profit rate throughout the financing tenure, meaning that the rental can be revised periodically to reflect the current market situation. So, as an example, if there is a need from bank to increase the profit rate in such situation of the current market condition, they are able to do so. And the other way around, in case that there is a need to reduce the profit rate. Second, no interest charge and advance profit. So bank cannot charge any interest charge or advance profit since it is based on the concept of rental payment and redeeming the bank share in the property. Compared to interest based loan, the bank are able to charge any interest charge or advance profit. For the third one, both party consent. So any decision relating to the proposal of the acquired property must be approved by both Musyarakah partners, meaning that bank must get approval or consent from the other party in order to make any decision relating to the proposal of acquired property. So same goes to the customer. They are also need approval from bank before make any decision. So for the last one, termination lease in ijara. So the lease in ijara agreement will cease to pay rent once he or she stop deriving benefit from the use of the property. In case of the property or asset are no more capable to provide benefit to the lessee are allowed to stop paying the rental fees.
Next is question number 4, which we will identify the possible risks that might arise from the features and requirements of the contract, and we will highlight as well the possible mechanisms that should be introduced to manage this risk. Next, we move to the possible risks that might arise from the features and requirements of the contract. First is Sharia non-compliance risk, which is the risk that arises from the Islamic financial institution's failure to comply with the Sharia rules and principles as determined by the Sharia boards of the Islamic financial institutions or the relevant body that allow the IFI to operate in its jurisdiction. First, Sharia risks arise when the goods or property not present at the moment or pledge which is not allowed to be entered into the agreement of Musyarakah mutanaqisah. Next, the proportion of the ownership or profit must be specified clearly at the pre-agreed ratio and not by the amount of money. The third one is none of the parties have the right to acquire others' share at the cost price. So, the price paid should be either the market price or the price agreed at the time of sale. And the last one, the contract of partnership and the contract of sale should be done separately and not collectively. Contracts underlying Musyarakah mutanaqisah could be combined in one package, but it should not be binding on each other. This means that Musyarakah and sale, which is buy, and rent ijara contract should be separated from each other. Next, we move to the other risks that might also arise from this Musyarakah mutanaqisah contract. First is operational risk. Operational risk arises from failure of Islamic banks in internal controls involving processes, people and systems, and from external events. For example, banks might face additional operating costs as a result of wrong documentation and therefore need to redoing the documents. Other than that, bank also might face a system failure to capture or keep the records of the transactions. Next is market risk. Market risk can be defined as the risk that influence the value of the assets. Many Islamic banks are still mirroring the conventional bank technique for financing recovery. When there is the situation where customer is unable to pay back the financing amount at all, the bank will sell out the property in the market through auction in order to recover the financing amount. However, in some cases, the amount received through auction is not enough to settle the financing amount. And the last one is credit risk. Credit risk arises when the clients default the payment. Default risk refers to the risk of counterparty failure to meet their obligation in accordance with agreed terms. However, Islamic financial institutions are prohibited from imposing any penalty to the customers. Next, Next, we highlight three possible mechanisms that can be introduced to manage those risks. First is key risk indicators. It is a quantifiable measurement used by bank management to precisely and accurately evaluate the potential risk exposure of a certain activity or process and how it will impact various areas. Therefore, banks can use this before they enter into the contract with clients. Next is credit management system. Islamic financial institutions shall have appropriate credit management system and administrative procedures in place to undertake early remedial action in the case of defaulting counterparties, such as establishing the enforceability of collaterals or third-party guarantees. And the last one is independent audit assessment. Islamic banks should opt for periodic review to deduct and address operational deficiencies, which this might include independent audit coverage and assessment by internal or external auditors. And also, we include Sharia compliance review either by a separate Sharia control department or as part of the existing internal and external audit function.
For question number 5, af- for question number 5, after analyzing the Sharia contract as presented in the banking product above, what conclusion and recommendations would your team propose in your report to your superior? In conclusion, In conclusion, Musyarakah mutanaqisah as an equity-based financing instrument and is better than debt-based financing because of its flexibility and end result in the ownership of asset belonging to the customer. Musyarakah mutanaqisah was previously suggested as a better alternative to replace the controversial BBA. However, till today, almost half of the Malaysian Islamic banks that offer Musyarakah mutanaqisah financing have stopped providing it. There are some issues to be tackled for improvement. Number 1, major maintenance and repairs. Issue arising surrounding the financing facility is the maintenance and major repairs to the property. Minor repairs are clearly within the responsibility of the client. However, under the Sharia, for maintenance and major repairs should be borne by the partners together as they are co-owners of the property. There is no clause in the agreement between the bank and the client which specifies the client to bear the cost of maintenance. It is said to be done based on a mutual understanding between the client and the bank. Thus, bank should clearly state in its legal documentation who is responsible for the servicing to avoid any misleading understanding of the client before they enter into the contract. Number 2, legal ownership issue. Number 2, legal ownership issue. Another issue would be the determination of the legal ownership of the property. It is a truism that the partners actually own the property that is known as beneficial ownership of the property. However, the issue now arises as to who should hold the legal ownership of the property, such as the person who is registered on the title of the property. This inherently becomes an issue because the Malaysian land law adopts the torrent system, which means system by registration. Accordingly, the name who is registered on the title as owner is the actual owner of the property and no one else. Some banks prefer to have their own names registered on the title as the owner, while some other banks would prefer to remain the names of the client on the title. In any event,
This in fact does not capture the true intention of the Musyarakah mutanaqisah, that the property is actually co-owned by the partners. So, the relevant authority should improve the legal framework in terms of the Islamic finance implementation generally, and particularly on the issue of ownership of the property. Lastly, clients' awareness. The interest of a customer could be further secured by carrying out the correct Sharia guidelines and stressing on the portion of profit and loss sharing contracts in order to clarify the misunderstanding and increase the client's awareness.